Here, and I'm going to introduce our next instructor, someone that's been with us also for a number of years, and that is Latanya Bacon. And Latanya is a senior stakeholder liaison in the Cleveland area, tax specialist. She partners with tax professionals and small business organizations to develop and deliver educational products and services to the small business community in Northeast Ohio. She has more than 32 years of experience with the IRS, a bachelor's degree from Cleveland State University. And we're very happy to have Latanya with us on this webinar because they still don't have permissions to travel. So not going to be able to join us at any of our in-person schools, but we're really happy to have Latanya with us. And I'm going to turn it over to you. Thanks for being with us.
Thanks, Barry, and it's good to still have some connection with you. I do miss being able to come out and talk and take questions and see what's going on in the world of our practitioner community. As he said, I'm out of Cleveland, Ohio. It's not much to say about me, and you have a lot in this chapter. So we're going to get started. I want to start off by saying we're not going to touch on everything. It's a lot in the chapter. But if you have a question on an area I don't touch, you can submit a question to Barry, or at the end of the presentation, I will have my email address. And you can submit it to me, and I will see what I can do about finding an answer and being able to address your question. So as we get started, before I jump into the chapter, I do want to bring your attention to the reconciliation of that third economic impact payment. The reason I want to stress that is because of the number of delays we've had in 2020, because of the reconciliation, when people are not sure about how much they actually received in EIP 1 and 2, it's resulting in math errors, which is manually reviewed returns, which in turn is delaying taxpayers' refund. So if I can stress on you to stress on your clients, when you get to chapter 15, you'll get a lot more information on it, but there is a letter that we will issue at the end of this year, the 6475. They should keep that as a part of their tax records. So when you're doing the reconciliation, you'll get it right. If you have any questions on the EIP3, you should go to irs.gov, frequently asked questions. They are constantly updating those questions, and they give you the date of the most recent update. Along those same lines, I would also stress the same information regarding the child tax credit. Those that are receiving the advance payments, they should expect a letter from the IRS telling them the amount of the advance payments they received in 2021 and the number of qualified dependents that we use to determine that number. Again, to avoid those math errors, you need to stress that they should keep that with their documentation and bring that in so you can prepare an accurate return. Here we have our objectives. We're going to talk a little bit about the P10 renewal program. We're going to talk about when enrolled, the most recent sign up or renewal for enrolled agents. The annual filing season preparedness program is something instituted by the IRS for those that are not accredited with either being an enrolled agent or a CPA. And it's a way that they can still represent before the IRS with for their clients on certain collection issues and as far as a taxpayer advocate. I'm not going to get into a lot of details, but that program is out there and available, and they do have continuing education requirements also. We will get into identifying cases that can be referred to the taxpayer advocate, knowing what service the taxpayer advocate service provides. I will touch base a little on the current cyber scams that are going on. A lot of them are related to COVID-19 and the pandemic. And under the IRS online tools, I'm just going to touch base on the authorization for power of attorney, something I think is very beneficial to the practitioner community. As you know, when we were shut down for that significant period of time, We got backlogged as far as opening our mail. And if I could suggest anything you can do with us online instead of sending us snail mail, I would strongly suggest you do that. And then there was a few changes to the new existing installment agreements and payment arrangements. We'll touch base on that also. So we'll start off with the IRS Return Prepare Office. And the Return Prepare Office oversees the P10 program, the Enrolled Agents Program, the Continuing Education Providers Program, and the Annual Filing Season Program for tax return preparers. Now, licensing renewal started on November the 1st for Social Security numbers 0, 1, 2, and 3 for enrolled agents. So if you fall in that category, you should be taking some kind of action if you haven't already did so to actually renew your enrollment status. Now, with the P10, I hope most of you are aware, if you're preparing returns for compensation, you are required to have a P10. For a new P10 user, you can go online to use our P10 online tool. It takes about 15 minutes to register and get signed up for that. If you're renewing, you can go in there and to renew your P10. I hope you're all aware that it is a $35.95 fee. It is non-refundable. As a tax professional, you have to be in full compliance with your personal and business tax returns or have an explanation as to why you're not. The P10 expires December the 31st of every year, and you are required to get a new P10 in each year you're preparing returns for compensation. If you are preparing returns and haven't received a current year P10, when you re-register, if you make it through to the next year, you're going to have to register and have that fee for those 2 years. So if you're not actively preparing returns, you really should go into the P10 system and put a hold on your P10 account. Because if you don't, even if you miss a year, you will have to bring that information up to date. Now, you can also submit Form W-12. The W-12 takes 6 weeks to process. So keep that in mind. If you need a new P10 for the filing season of 2022, you should be getting that W-12 in the mail as soon as possible. Considering our backlog, it may take more than the prescribed 4 to 6 weeks. So it brings us to our first polling question. True or false? Practitioners that prepare returns for compensation must, Barry, your question came up over my question, must submit Form W-12 to renew their P10 by December the 31st each year. True or false? I think the operative word here is must. This is false. They can go online and use our P10 tool to renew their P10. That is the fastest way you can do that. And I would say when you're renewing your P10, look at your information, your address, your phone number, your web address. You should also be updating that information so we have the most current information on record for you. So our next.
That's an annoying part of the polling question. Sorry about that, Latanya.
That's okay.
Covered up. We'll give 5 more seconds and we're about got everybody has answered, I believe. And there we go. We'll end the poll and share the results. And I'll leave that up for just a couple of seconds and then I'll close it out.
Okay, that's quite all right. I just, I didn't think I had to look down. I'm trying to keep that eye contact thing.
I appreciate it. Okay.
Okay. Okay, so let's talk about the Taxpayer Advocate Service. The Taxpayer Advocate Service, they're an independent organization and the IRS, and they're put in place to help taxpayers resolve problems they have with IRS and our policies and procedures. And they're also there to prevent future problems. So they're an independent organization in the service that work on solving problems that taxpayer encounters. They have 2 types of authority. They have a statutory authority, and under the statutory authority, it gives them the power to go to the business unit or other functions and request adjustments that they don't have authority to make for themselves. And they advocate on the taxpayer's behalf as to why that we should make the adjustment, why it could be something as far as a hardship that they need the refund, well, why we should process the return as soon as possible to get that refund out to them. So it gives them authority to make adjustments that they don't, well, they're not authority. It gives them the power to ask the business unit to make those necessary adjustments. And then they have the delegated authority, and they receive that authority from the commissioner under Delegation Order 1312. And what they have with that, it gives the advocate the right to approve a replacement check for a lost or stolen refund, even when there's no credit on the taxpayer's account. It also allows them to gather documentation to substantiate credits on accounts when there is no other business unit working that account and the payment may be misapplied. And it also gives them the authority to release liens on accounts that are not currently open by any other IRS function. So they have a lot authority to make adjustments on the taxpayer behalf. And if you're asking yourself, how do you get to the taxpayer advocate service? They have a list of 9 criterias that you can meet to have a case referred to that office. Now, the first 4 fall under economic burden. An economic burden involves those that have financial difficulties for the taxpayer. IRS action is causing, or inaction is causing a negative impact on their finance, or they can have long-burst adverse consequences for the taxpayer. Criteria 1, the taxpayer is experiencing an economic hardship or about to experience a hardship. Under the second criteria, the taxpayer is facing immediate threat of adverse action. Under the criteria 3, the taxpayer will incur costs if relief is not provided. It could be professional costs. It could be something that they may lose the sale of something. So it could cover a large range of things. And the fourth is that the taxpayer will suffer long-term adverse action if relief is not granted. Now, I do want to indicate here that there are some interim guidance, and these are guidance that are cases that will not be accepted under economic burden by the tax office. And those are those affecting regarding the advanced child tax credit, the EIP payments, not processing of an amended or original return that we don't have in our record, in our system, and also those that are relating to fraudulent unemployment claims in 2020. We know that the service is backlogged across the service, and the advocate stepping into these type of areas, they really don't have the power to do anything to change those circumstances. So as we move on to the next category, we have systemic burden. Now, under systemic burden, those are cases where our process, systems, or procedures fail to operate with the intent. And as a result, the IRS has failed to timely respond to resolve the taxpayer's issue. Under criteria 5, this is when they're experiencing a delay of more than 30 days and there is no prescribed time frame and a form instruction or processing time, like with the 1040, if it's paper, 6 to 8 weeks, we're looking at 30 days and the taxpayer has not had a response. Under criteria 6, the taxpayer has not received a response or resolution by the date promised or inquiry date as promised. So if the taxpayer has not received a response by the date we promised, you could be eligible for the taxpayer advocate office. Keep in mind, I'm sure all of you are aware that we do send interim responses out. So you have to take those into consideration. But if you're constantly getting interim responses over a course of a year, you may want to move your client toward the advocate office to get some type of resolution for them. Under number 7, a system or procedure has either failed to operate as intended or failed to resolve the taxpayer's issue, or the taxpayer still has a dispute with the Internal Revenue. Once again, under systemic burden, there are some cases that task will not accept. First being, if the taxpayer is questioning the constitutionality of the tax system, if it is a frivolous tax strategy. Also keep in mind that if the taxpayer is experiencing an identity theft issue where they are working through the identity theft process, task will not accept that case, but they will refer it to wage and investment accounts management area for resolution. Once again, on the processing of original returns, if that's not in the system, there are some unpostable and reject returns that they are not in a position to help. And also injured spouse claims. In some circumstances, there is processing inventory problems in those areas. If it is something that is set up where you've been more than patient, it's been more than what we're saying now, we're taking at least 18 weeks for an amended return. If you're getting on the year side of that, depending on how you write that up, you probably could get them to address it. A couple of exceptions to what they will not accept is if they receive it in a congressional. Any of those that I said are not eligible for TAS. If they get that in a congressional, they will address the issue. And also if they're currently working another issue and an issue such as a return has not processed, they will take that into consideration. So those are two exceptions to the ones that I indicated they're not looking to accept cases on. The final two criteria is number 8, in the best interest of the taxpayer, and number 9, public policy. A lot of weight is with the National Taxpayer Advocate. She controls those two issues. I mean, in the best interest of the taxpayer, you're infringing on the taxpayer's Bill of Rights. And as far as public policy, she's looking for what policies warrant assistance for individuals and groups. So you don't find those criteria being addressed that often when you're looking at the 9 criteria available. As I said earlier, the task office has the power to invoke a tax assistance request, and that's when they forward the request to the business owner or the function where the taxpayer is having issues with the recommendation of what they need to do to give the taxpayer relief. They submit that request. This is an internal form, the 1214, the 12412, and it is something that is prepared based on the information you're providing to the caseworker to share with that business owner why that adjustment should be made. How do you get to the Taxpayer Advocate Office? To your local taxpayer advocate. The taxpayer or you as a representative can file Form 911 and fax that to your local taxpayer advocate, or you can call the intake number 1-877-777-4778. The case will be assigned to a caseworker, and it's the average time we say is 7 days. I would say give it 10 to 2 weeks because they also are working overage inventory. And I would strongly suggest that if you're submitting something for consideration, I think the best route to go would be use Form 911. If you go to irs.gov and type in LTA, you will have a map of the LTAs across the country. In our case, Ohio, when you go to that area, there is a PDF form, a Form 911. I would complete that and I would fax it. And there is a fax number listed on irs.gov. And that you're taking out When you call that toll-free number, it's going to take you through a series of questions to see if you are actually eligible and meet the criteria. You take that out the process. Once they receive the fact, someone will have to get back in touch with you to discuss. And I mean, you may receive that it doesn't meet their criteria, but I think you have a better chance of getting it through by using the 911 and faxing that information. So now we're going to turn to cybersecurity. This is something that I work a lot with here as I work with the data breach team here within stakeholder liaison. And cybersecurity is very important, not only to the IRS, but you as a tax professional community. They know that the information you warehouse can give them the best chance of making a return look legitimate. And they have several ways of trying to get information to put together that legitimate return. With the COVID-19 and the pandemic, there are lots of schemes out there relating, and they're looking to exploit the taxpayers' hopes and fears about COVID-19 and their need for financial assistance. And they're using social media to get information. They're sending out phishing emails, and they're targeting the tax professional with tricks like, hi, I'm a new client. Can you take a look at my information? So it's very important to be aware of phishing emails and doing what you can to protect your software, your network, your computer. What we know is that 90% of all data thefts begin with a phishing email. As I said, they're using the EIP 1, 2, and 3 payments as a ploy, saying, hey, we have your payment here, give us your bank account information. That is something that the IRS would never do, and it's helpful if you educate your clients to that. Also, with the phishing email, they're using the email as bait. They're trying to get you to do something. They're going to make it look like it's a trusted bank account, a friend, even the IRS, that you feel secure enough to click on the link or go to the fake website that they've presented in the email. We say, please verify before you click on any link. It will save you a lot of headache in the end. So once you recognize that you have a phishing email, it's okay to open the email, just don't go into the link or open the attachment. If you find that that person is impersonating the IRS, I will show you where you can report that directly with the original email. But once you see that you recognize you've got a phishing email, please don't take the bait. Don't click the link or go into the website. Now on this slide, it's just a caption of one of the fake emails, phishing emails that's going under the new client scheme. And it's friendly enough. And this is a series of emails. This is the opening email. Searching for a new tax preparer, give you an idea of what he wants and the price he's willing to pay. And that's just to get your interest. They will follow up with a couple of more emails till they get to the point where they're going to send you a link or an attachment. Please call before you click that link for a new client or go into that attachment. If they're not giving you a phone number that you can reach out and verify who you're talking to, you should be leery of going into that those links or website. Also, I just want to make note that we have seen situations where your tax professional clients' emails have been hacked, and the practitioner receives an email, and the email says, hey, I need you to change my direct deposit account information. And practitioners have changed those accounts only to have that refund go to the fraudulent account. If your client sends you an email and asks you to change his account right before you're about to submit their return, please take a minute, call your client and verify that information. It will save you a lot of work and hurt. Not that we're not going to make that practitioner a whole again at one point, but the processing for identity theft can take up to 180 days. So that's a lot of time to be sitting waiting for a refund you expected to receive in 10 to 21 days. Remind your clients, as I'm reminding you, we do not send out threats of lawsuits or jail time for balance dues. We don't accept gift cards and debit cards. We don't receive payment by an iTunes card. If they're asking for that type of payment, a light should go on. There's something wrong. And you can always go to irs.gov, and we have several ways that you can make electronic payments. But you're going into the irs.gov website. We're not coming to you asking you to make the payment that way. Also, if they get an unsolicited email and they're saying they're the IRS, we do not come out unsolicited and ask for anybody's login credentials, social security number, or any other personal identifiable information. So education is the first line of defense when you're dealing with the fraudsters. And every year they get better and better, and they come up with new schemes. So you always have to be on the watch and be vigilant. I don't know how many of you are aware, but across the country, there were a lot of unemployment compensation fraud going on where people had enough personal identifiable information on taxpayers, and they were setting up unemployment claims because the benefit, they were getting large payments, and they were using that information so that they could get that money fraudulently. I personally, here in the state of Ohio, received a letter from the state unemployment telling me that I needed to go in and set up my IPN. It was as simple as me going to their website and communicating that I had not filed a claim. But that's with me having a little knowledge about background with taxes and unemployment, that I know that. Please educate your clients. If they receive a 1099-G and they did not file the claim, the first step is to go to the state that issued that 1099-G. We are advising taxpayers that once they go in and get that investigation going, that they should only report the income that they actually received on their current year tax return, even though they have not received the corrected 1099-G. So it's very important that they shouldn't absorb it on their tax return thinking that, oh, it's in my number, I gotta report it. Once they make that contact, and it's important that they do make the contact with the state, they should go ahead and report the information on their return as it is correct. They do not need to file Form 14039, 14039, the identity theft affidavit. They should be working with the state that issued the 1099-G. Now, one of the easier protections for them, if they receive that type of notification, they think they may be a victim of state unemployment fraud, you may want to suggest that they go in and request an IP PIN on irs.gov. It is strictly voluntary, but that is that additional 6-digit number that is added to the return that allows us to process the return. And I will talk a little bit more about the IP PIN on a later slide. If you're working with employers, they are the first line of defense for the unemployment claim fraud. If they receive a notification from the state unemployment office that they have received a claim for an employee, and especially if it's not their employee, they need to reach out to the state and make that correction. As far as the Internal Revenue Service, if they feel that someone is fraudulently using their EIN, then they should file Form 14039B, and that's the business identity theft affidavit. And we will take into consideration and put any filters we have available to stop them from trying to file a fraudulent tax return. Another thing, as a defense, if you're working with a business that is going out of business, has gone out of business in 2020, please write to the Internal Revenue Service entity section and let us know the business is closed so we can inactivate that EFIN number. So the fraudsters will not be able to use numbers that nobody is actually monitoring, and the business is closed, and up and behold, a year or two later, they have an issue because of some federal state return that's been filed under their ID number. So please, if your client go out of business, you should notify us in writing. And that brings us to our second polling question. What is the IRS identity theft unemployment guidance? A, only include income you receive, even if you have not yet received the 1099-G from the state. B, do not report the incorrect 1099-G on your tax return. C, there is no requirement to file Form 14039 identity theft affidavits, or D, all of the above. I think that's, fairly simple. And, we don't want you to have to go back and do a lot of return corrections. I can't stress enough that they should go to the state and get that information corrected. And once they do that, they should only report the income that they have actually received, and any documentation that they have that they reported it to the state. I would strongly suggest they keep that with their tax records. Okay, so I am going to go on and talk a little bit about if you or your clients receive a phishing email that is impersonating the IRS. We are asking you to forward that original email to phishing@irs.gov. As I said, you don't reply to the email. You should not open any attachments or links. And when you forward that information to us, it gives us an opportunity to see what new schemes are out there. But in some cases, we can trace the URL address to find the originator. And so anytime you receive that and they're impersonating IRS, please send that to phishing@irs.gov. If you, as a tax professional, are a victim of a data loss, you should report that to your stakeholder liaison. And I would be the stakeholder liaison in Ohio. We have several other. We have Nichelle Gray here in Ohio, and we have John Linstead. If you go to irs.gov and type in stakeholder liaison, it will send you to an email address where you can just, as simple as, I think I'm a victim of a data breach and I need someone to call me. One of us will get back in touch with you as soon as possible. And we will refer you to RICS, our Refund Integrity Services and Compliant Unit. And they will work with you not only to save for the government's interest, but also try to protect the refund for your clients. So please reach out to us if you think you are the victim as a practitioner of a data loss. The Security Summit, which it consists of the IRS, industries such as the software provider, the state. We work together to try to stay abreast, if not ahead, of the latest schemes and the way that we can protect the integrity of the tax system. And they came up with 6 steps that you should take to protect the data that you have. Your antivirus software, that is something that you should update and have automatically updated regularly. Most updates are a security glitch that the software provider has found and made a fix for. So you should have that automatically set up to update for you. If you're doing it manual, you may miss one, and that's the best way to secure your software and the information you have on your computer. As far as the firewall, that's regulating and not letting everybody into your website, into your email addresses. having it being able to identify what may look like a fraudulent URL. If you know, with the IRS, there are very few things that can get past our firewall. One of this presentation today, I'm with my personal computer because I couldn't even receive this link to join this call through our firewall. The two-factor authentication is an added step to protect the information you have on your computer. Most tax software providers offer this feature free. Most email providers offer this feature free. And what it is a two-step process. Not only do you need your username and your password, but you also have to receive a security code to sign into your system. Most use either the security code comes in an email address, or it'll go to your mobile phone. We prefer the mobile phone with the IRS. And in that two-step process, we don't think that the fraudster would actually have your actual cell phone to get that other code. We do strongly suggest that you use multi-factor authentication, not only when you sign on in the morning, but every time you sign into your tax software system, you should be using that dual factor. Please back up. You are required to back up your information online, and it should be to an external drive. This helps with the ransomware, where fraudsters are locking up computers and asking for a certain amount of money to give you a key to unlock your computer. You can guess that a lot of times the key's not going to unlock your computer. But if you back up on a regular basis, you have a place to start to rebuild your files. And you don't have to even consider, which the FTC strongly suggests, that you don't pay the ransom. You should encrypt all your drives, where someone that gets in your computer, they just can't easily read all of your email, the information you have on your software. And finally, with remote working, you should be using some type of virtual private network to keep the information that you're sending across the internet to your virtual place of work, that fraudster just can't get to that information. We do strongly suggest that. We're looking here at an IP pin. I said we would get back to that. The IP pin is a 6-digit number. It's assigned to an eligible taxpayer. Once your taxpayer has an IP pin, you cannot submit an electronic return without it. On the paper return, the taxpayer's primaries go down by the signature. On an electronic return, if the primary and secondary has an IP pin, we need both the primary and secondary. If the dependents have an IP pin, you're going to need the dependent's IP pin for the 2441 and the EITC. So everyone that has an IP pin on the return, if you're filing electronically, if they're not in the system, we will reject the return and the taxpayer will have to go to paper. And what it does is just adds extra level of security for the taxpayer. I would also say, if your taxpayer has an IP pin and you're preparing returns, please do not put the taxpayer's IP pin in the return until you're ready to actually submit the return. If you're storing that IP pin while you're waiting to submit the return, if the fraudster is in your system, it's only a matter of them sending the return, and there is nothing we can do to stop that return from being processed. Once again, I'm not saying your client wouldn't be made whole, but it would put them in a position of having to go through the identity theft process to receive their refund. Once we issue an IP PIN, you are required to get a new one every year. And they're normally issued, if we send it out by mail, late December, early January, right before the filing season open. Now, recently in the year of 2021, oops, I went too far, because you don't cheat. Don't cheat. Okay. In the year of 2021, we made where people could voluntarily get an IP pin. And when they go in to get the voluntary IP pin online using the IP pin tool, if they go in and get their IP pin, and that means them passing secure access, which is the IRS multi-factor authentication process, where they not only need their username and password, but they also get the security code. There's a process that they have to go through to get into that secure access. Not all taxpayers can get through the process, but I will talk a little bit later about a workaround we have as far as the IP pin program. But if they get their IP pin online, every year they have to go online and get their IP pin. We will not mail those to their address or record. And I want to make that clear. So now I'm at the next polling question. And what I'll say here is 90% of all data theft begin with a phishing email, true or false? Well, while you guys are answering that, what I will say is if you have a taxpayer that cannot get through our authentication process, we do have a workaround for the IP PIN program. Now, if your client income is less than $72,000, adjusted gross income is less than $72,000 for the year, they can submit a form 15227, application for identity protection personal identification number, and someone from accounts wage and investment will call the taxpayer, and they will take them through a series of questions to help authenticate them. Once they all meet the authentication, they will be set up to receive an IP PIN. Now, here is a catch. They will not receive an IP PIN until the next filing season. So if they were to get through the process today, they would not get their IP PIN until next year. Now, the IP PIN system will be shutting down at the end of this week because we have to get ready for the next filing season with the e-file platform. So whatever year your client goes through the process and use the workaround of the 15227, that IPN does not become active until the next filing season. So keep that in mind. If their income is over 72,000, they can go down to, they can make an appointment to go to a tax assistance center, and then they can bring 2 forms of ID, whatever tax related documentations. They will be verified. Their identity will be verified at the tax assistance center. And in those cases, they will receive their IP PIN in the mail within 6 weeks. Now, a lot of people ask me, what's the difference? Why the 72,000? I can tell you the reason that they're mailing the IP PIN for those that they're doing over the phone. I've been advised that it's a security reason. For security, they're not going to send them out in that current year. And as far as the 72,000, it kind of falls in line with the free file, if you know the limit for free file. And that's the most I can say on that.
LaTanya, I'm just going to make a brief comment on the polling questions. This one I left a little longer than normal,
Okay.
but there have been some comments, and we don't always, I won't always announce the closing of these polling questions. I've made that clear over the first 2 days. So folks, you've got about 60 seconds. So just make sure that you're being attentive. I'll turn it back over to you, LaTanya.
Okay, and I'll keep going while they take that time. Okay, so what we're looking at here, I said we would talk a little bit about the online tools, and I see we're coming up into with less than 10 minutes. There's a lot of online tools listed in your chapter. As I said, I will if you call me and ask me for any information, I would say that try to do whatever you need to do with us online. When I say that, I know that most of the things that we do, you have to get through our secure access process. But in most cases, if you can get through that process, then you're going to do a lot better online than actually mailing us something through snail mail or sitting, trying to get through the toll-free lines. So I wanted to spend a little time talking about the power of attorney, the 2848 and the 8821. This graph here, it shows a process that was put in place. It is submit form 2848 and 8821 online. And this flow chart shows you where you get the client signature, either in ink or electronically on the 2848 or the 8821. For the tax professional, you'll need to sign the 2848 also. You don't need the signature, your signature for the 8821. And then you as a practitioner, you go to irs.gov and you submit the 2848 online. And that's going to our online tool, and you will need to have made it through secure access and use that and your name, username, and password. You as a practitioner, you will upload the document. The signature of the form will be sent to the CAF repository. The CAF unit will receive the authorization from the repository, and they will go through their verification process. And if it meets all the required fields that they are required to have, then it will be uploaded into the CAF database. Now, with this online process, as I said, you can use a digital signature, and it could be a commercial digital signature. They will accept it through the online process. If you go to the instructions of both of these forms, they will tell you what is acceptable as an electronic signature. But one of the important things that are in the instruction is that you must verify the taxpayer's identity if you receive that transaction in a remote transaction. So remote transaction means that that taxpayer was not sitting in front of you when they signed the form. You do have the requirement of verifying that taxpayer's identity. When you send us a fax using the online platform, it has to go through processing just like it would if you fax it to us or you mailed it to us. What you're doing with this form is you're taking the snail mail out, but the CAF unit still has to take the form, and they have to go through and make sure that all the required elements of that form has been completed. I do want to pause here and say, for those of you who aren't aware, if we find something not included on the form, we're not reaching out to the tax pro. We're going back to the taxpayer with the letter saying that we cannot process. So before you spend time trying to get through to practitioner priority service or calling the toll-free line, please call your client and ask them, did they receive a letter from the IRS regarding the authorization? And that can save you some time. So in the summer, the IRS launched another way that we can accept 2848s and 8821. It's the Tax Pro account. And it's a self-service online portal that allows the creation of an online application form, and that it can be signed by both the tax professional and the taxpayer. Now, it will require both you and your client to be able to get through the secure access process. So because both of you are required to go in to the Tax Pro account and sign the power of attorney, but it gives you the ability to upload that information directly to the IRS. Now, you can use the secure access system as a practitioner, but if you use e-services, you can use your e-services username and password also. The first time that you go into the system, you are going to have to accept the terms, but you'll only have to accept them if there are some adjustments, which the service doesn't expect that to be too frequently. So that's a one-time agreeing to the terms of the service. On this slide, it's just showing you the different ways that you can receive authorization or receive tax account information for your clients. Under the email, fax, and the e-fax, we will only accept the wet signature, that's the way we normally sign pen and ink on paper. For the practitioner, we need the wet signature. And as you know, as a practitioner, on any of these three columns, you're not required to sign the 8821. If you'll notice with the online form, it says it can take a wet image of a wet signature or electronic. Electronic means that you're signing at return with the intent of it being you giving consent. Same thing for the practitioner. But if you look at the third column, it requires a digital signature, and you can submit that digital signature in the Tax Pro account application when you're inputting it, as long as you have been through secure access and your client has been in secure access. When you're looking at electronic signature, it can be a handwritten signature. It could be an image of a handwritten signature. It could be a stylus signature, or you can have an electronic pad. But when you're talking about the Tax Pro account, we're looking for a digital signature under that system. Now here, I just want to, I think I pretty much covered this. I do want to spend some time on the remote transaction and authentication. You as a practitioner, you are required to authenticate, and you have to attest to it in the Tax Pro account software. And the first thing I want to say is, if you have a working relationship or a personal relationship with that person, and you know who you're working with, the process that I'm going to talk about next, you don't have to follow it. It's in a situation where you're not familiar with that person. You are going to have to require a photo ID, and you're going to have some type of visual look at that person. Either they're going to need to send you a selfie, or you could do it with a video conference with Zoom or FaceTime. But if you are not familiar with that person, when you're going into the system, you are attesting that you have verified the authentication of the person that you're working with. And that's very important as far as the integrity of the system. Here's a type of ID you can use. You can accept. And like I said, it could be a selfie, or you can go through video conferencing. But these are two forms of ID that you, identity verification that you must use. If you are working with a business, you need to be working with someone that has under the covered relationship, that has authority to give you authorization. You need to be able to verify the name, the EIN, the address through a secondary document, such as a tax letter from us, a tax return, the W-2. And you also have to have that visual, the ID and the visual identity, if you're not familiar with that person. So we made it to the last polling question. With okay, here I go. I got to get there. With the addition of the Tax Pro account in the summer of 2021, how many ways can you submit an authorization form to the IRS? And as you guys address that question, I am going to continue to move on, because I see we are past our hour, aren't we, Gary?
We're going to have to wrap it up, I'm afraid.
Okay, we're going to wrap it up here. I just want to tell you that if you go to irs.gov and type in tax relief, you'll see the way we have to assist taxpayers that are going through some type of financial problems, and they may need to adjust their installment agreement. And Gary and Barry, I am going to stop talking and get myself to my email address. How about that? I'm turning it over to you.
Sounds great. Thank you. Sorry we don't have more time for you. A lot of great information, a lot to think about. And there are 2 or 3 questions in the Q&A that you might want to have a look at, and you don't need to answer them now, because I'm going to turn it over to Meryl and John to answer some questions. So if you want to look at that feature, that question and answer feature, there may have been some of those that you already answered, but they'll be towards the bottom of that. So you can have a look, and I'm going to close the polling question and I'm going to end that poll, and we're going to share the results. So I'm not sure, LaTanya, if you want to address the results of that poll.
The results is 4. You have mail, fax, online 2848, and now the tax pro account. So there are 4 ways you can submit it.
All right, great. I'm going to stop sharing and I'm going to turn it over to, I think, Merrill first, or yeah, let's go with Merrill. Looks like he unmuted himself. So
All righty, thank you.
It's all yours.
Thanks. All right, so the first question I answered privately, well, not privately, I sent it out to everybody. And once I answered it, it disappeared. So I didn't answer the rest of them, so I'll do them verbally. So should all charity statements be signed by the taxpayer or by the treasurer of the charity to verify a tax deduction? I went to the publication regarding charitable contributions. It did not say who could or who could not sign the statement. Certainly the treasurer would be a good person, but it didn't say that it couldn't be someone else. So the answer would be no, it's not required. Number 2, check or cash donation to a church, excess $250, is the annual statement received at the end of the year with itemized for each $250 listed acceptable? Yes, absolutely. My wife gets a statement at the end of the year. It lists the date of each contribution, and that is perfectly fine as long as it has, all the other information on the letterhead, the name of the organization, and obviously signed by someone. That is generally fine. Does the QCD age go to 72? No, it stayed at 70 and a half, so that did not change. You can obviously make it at 72, but you can make it also at 70 and a half and then go forward every year if you want to. Let me go down. Next one. Can you do a qualified charitable distribution from a SEP, IRA, or simple IRA? No, it has to be a traditional IRA. Let's see. Oh, so down too far. Give me a second here. This one is John. I'm going to skip it, but I'll read it, and then John could cover it. Would you be able to discuss the income tax implication of going from an MMLLC? I'm assuming that means multiple member LLC to a single member LLC upon the death of a member. I'll let John answer that once John, you want to answer that now, or do you want me to finish answering the rest of my questions? Okay, I guess I'll go forward. Let's see, I have a church that has a traveling minister that wants compensation through housing allowance. Is this allowed? So what they're asking, which at least I believe is asking, is no salary, just a housing allowance. I would say that is probably inappropriate. I'm not saying that the amount of the housing allowance is questionable, but obviously some of that is for services to be provided. So I would think there should be some allocation made to both of those. Otherwise, it certainly appears obvious that they're trying to avoid paying as much income tax federally and state as possible. Kevin, say, should a W-2 be issued if the entire amount of salary is being designated as a housing allowance, or would you issue a W-2 with a ANA amount only in box 14? Well, I would say yes, issue the W-2, and if there's nothing else, and this sort of piggybacks on the prior question, it seems odd that there wouldn't be any salary and all of it in a housing allowance. I would think that might be questioned somewhere down the road, depending on the dollar amounts involved, because you're telling me that the individual is not getting compensated, or if they are getting compensated, it's all in the housing allowance, which seems that would raise questions. Next one, from Christina. I thought John said that box 14 on Form W-2 will show sick and family leave wages in 2021. If so, where do we show the housing allowance for the minister. You could probably put multiple items in that box. It's a fairly large box, and it's similar to the box, I believe it's in box 12, or not box, let's see, the box for the different retirements, which I believe is, yeah, box 12, where you can put various different designated letters from the back to indicate which retirement plan it is. So I don't think that it's a problem. It might get a little tight in space if you have both. Let's see, Cynthia, can Merrill provide a few examples of when we would need to research a tax treaty? And that's a really good question, and I found a pretty good answer on irs.gov. It said you should carefully examine the specific tax articles / treaties to see if you're entitled to: one is a tax credit, tax exemption, a reduced rate of tax, or other tax treaty benefit or safeguard. So there's several reasons why you might want to consider looking at it. Normally, you wouldn't have that scenario if you're just getting passive income through a fund, and it lists that there is foreign tax and foreign tax credit might be applicable. Let's see, can we renew our EA certificate before completing the continuing education for 2021? I will let my very, very good friend from the IRS answer that if she's still on.
Okay, Merrill, that would require your very, very good friend to be paying attention. What was the question?
All right, can we renew our EA certification before completing the continuing education for 2021?
No, you have to certify when you renew that you have met your CE requirements. So it's
Okay.
important to get those done before the end of the year.
All right, let's see. I emailed the taxpayer's return on 2/16/21, and the taxpayer has to date still not received his refund. When will the extensions of time to process the 2020 returns end? I will let Latanya answer that question.
I got it. I'm listening this time.
All right,
Okay, so we're talking about the 2019 return.
it said, I'm guessing, well, no, it doesn't say. It says, I e-filed a taxpayer return on 2/16/2021. So that could be a 2020
2020.
return.
Yeah,
Yes.
so let's just go with the 2020. And we know that last time I looked at the level of operations available on irs.gov, and you can get to that by going to our website, and at the bottom, it has operation services. It's updated weekly. We still had approximately 7 million unprocessed returns. And what I was saying in the beginning of my presentation, a lot of them are either due to the EIP payments and the reconciliation, or the EITC and the ability to use the 2019 income to determine what your earned income tax credit was. So if you filed that return and we had to do any manual adjustments, there is a possibility that we are still looking at that return. I would say that if your client received a letter and they responded to the letter, if you received a letter, we're asking additional information that if you provided that information, we're telling you to still allow processing. If you think it's been something and that we have not responded to you, we haven't sent anything, you've looked at where's my refund, that's not updating, then you may want to look at the the taxpayer advocate office to see where you're at in the process.
Thank you. I got another one for you. Do you want me to read it?
Go ahead. I'm enjoying this. Go ahead.
Okay. Can I make some up? No.
Yes.
How long is IPPIN for once you apply? Not quite sure I understand the
I think
question.
they're asking, it's a question how long it takes to get an IP pin once you apply. If you do
Quite
it
possible.
online, you can get it right then when you're in our online system. If you mail the request into us using the workaround, then that would, within my understanding, within 2 to 3 business days, a customer service rep will reach out to you and take you through the authentication process. If that is something that you have to go to the Tax Assistance Center, then you would receive it within 6 weeks. As I said earlier, if you're using the 15227, you're not going to get the IP pin in the year you applied for it. It will come to you the next year. I hope that answers the question, and if they can if they could clarify it in the question and answer, I'll come back to it.
Okay, there's a couple more. I'll read them to you. We filed for refunds with the IRS during December 2020 under Rev Ruling 2020-24, carrying back NOLs. We have not received a response from the IRS nor any refund as of last week. What should be done, if anything?
At this point in the game, we just updated our website regarding the NOL, and that we are well beyond the 90-day processing. And they are aware of the backlog. Again, if it's a hardship, immediate, imminent financial danger for your client, I would look to the criteria of tasks to see if you could get some actual assistance. It will require us actually having the return in our system and on record. And I don't know if they've got any verification that we're actually processing, but I would say that would be the first step, is to make sure we actually have the return on record. And if it's causing the taxpayer undue hardship, take advantage of the criteria that TAS have set up.
Folks, we're
Okay.
going to keep answering questions, but if you have a concern with time, you can depart now and rest assured that you're going to have full credit for your CPE. So, but we will continue here, continue to answer questions for a few minutes.
All right, this one's from Teresa. I feel like I'm that guy on the, what's that, what's his name? We get those, play a song. I got to play a song for Julie. Oh, who was that? Read off the, Dick Clark. That's
Oh,
who.
okay. I was
All
going to
right.
say it may have been before my time.
No, okay. Client received an IP pen dated for 2021 and 2020. Will he get a new pen, or will it be good? This was a nightmare.
Okay, he will get a new IP pin for the tax season of 2022, and it will probably be issued either at the end of December or early January before we start accepting tax returns. But they should expect a new IP pin every year. That number changes.
Okay, this is, I guess, a follow-up to your other question. In other words, how many years do you have to keep getting the IP pin?
And that's when you asked me the first question, I was typing out a response to that. Once you're in the IP pin process, there's currently no opt-out. There have been rumors that the service is looking to coming up with an opt-out procedure, but currently, once you're in that program, you have to have the IP pin, and you either going to receive it from us by mail, or if you did and received it online, every year you would have to go in and get a new IP pin, or you're going to be forced to file a paper return.
Okay, and this next one's from me.
Thank
this
you.
deals with related to the housing allowances, all that's on the W-2. So getting back to that question, isn't it up to the pastor to demonstrate to the IRS the amount of housing allowance is used for housing, and if not, would be taxable? And that's true. If the IRS came back and questioned it, then they would be looking for a couple of things. That something should be in writing. In fact, there always should be a contract for employment, and it should spell out how much is the housing allowance and how much is compensation. I have not seen where the IRS has, at least recently, we've had tax court cases in which we lost, but we didn't lose in situations where all of the income was listed as housing allowance. There was usually some income as for services in the form of a W-2. Okay, SEP and simple IRAs are qualified for qualified distributions if they are inactive. I'll check on that. I don't know if you're telling me that's what the answer is. SEP, because when I looked at it, I'm pretty sure SEPs weren't, but I can take a look and get back to you. And let's see.
Hey,
let-
Merle, I see
Yes.
there's a correction in there for me about the taxpayer advocate anonymous.
Yes, go ahead.
I thought the taxpayer advocate announced this week they are not accepting amended return requests, i.e. NOL. I am not, if it happened this week, I'm not aware, but I thank you for that. I wouldn't want to send anyone there. The person that had that question, my email address is here on the screen. Please, you can reach out to me, but thank you, Anonymous, for that update.
That's all I've got. I know there
Okay.
was one out there for John regarding the LLCs for multiple member to a single member.
Okay, I answered that in a written form. Basically, the multi-member to a single member, what you have is, if it is an S corp or a partnership, you're probably going to have some kind of gain on the distribution or sale of the partnership interest, redemption of it, redemption of the stock, and or depending on the agreement, which forfeits the ownership back to the corporation or the partnership. On it, there is no, that's it. That's basically it. Everything else, basis of assets, so forth, carry forward. There's no particular tax complication other than the redemption of the partnership interest and the redemption of the S corporation stock. If it's redeemed in the S corporation stock, it doesn't terminate the S corporation, but the partnership is terminated. So the S corporation can continue on with the single stockholder. The one thing also to note is that no section 754 stepped up basis exists when you redeem a multi-member's partnership interest and it becomes a single member. Other than that, a specific question, please contact me. My email, jmlaw2@aol.com. Thank you.
Okay, there's one last one, Tanya. I have 2 clients received a thank you from the IRS for filing an extension. Don't laugh. For their Form 5500, neither one of them have an employee pension plan. I have written a letter for one. Is this a problem?
I would reach out to see if they've got a letter and it's not a client's plan. I think that deserves a call to make sure that someone isn't using that EFIN fraudulently. I'm not laughing. That is not me laughing, whoever it is, but
That's
no.
me, and I
I know.
apologize because when I
I
heard the
know.
IRS sent a letter out thanking anyone for anything.
I
No
know.
disrespect, LaTanya, it created a chuckle in me.
I
That's all.
know, and I would be concerned and leery, and then definitely if it was an email, I would not click on anything.
That's so true.
So I would tell them to contact, and I'm not really sure what their number is. Merle, maybe you can, I can send it to you if I find it and you can share it tomorrow. But I
Tomorrow?
would call employee plan on that one.
What's tomorrow?
Certainly write a letter.
Oh,
Certainly.
not for next week. I'm
Next
sorry.
week. Right, and I'm looking up Linda's question, so I'll have an answer for next week
Okay.
as also. I'm not
Okay.
presenting next week, but I'll be on and I'll have that answer.
Okay.
And the IRS does send thank you letters once in a while, John.
Yeah, right.
No comment. I still work for the guys. Okay.
All right, everyone. I think we're going to draw this to a close. I want to thank all of you, and you're all being very bashful with your cameras off. It makes me feel alone out here, but thank you, Merrill, for running through all those questions, and to all of you for a lot of great instruction today. It was just a lot of good information and answering so many questions. And I want to thank all of you out there as participants for hanging in there with us and being a part of our education. And of course, last but not least, of course, Julie, for all of the work that she's doing on our behalf. So unless any of you have final comments, going once, going twice, okay. We will look forward to seeing you all on Friday. That's our fourth part of our 4-part webinar. So
Okay.
thanks
Thanks
all.
for having me. Thank you.
Thank you, Latanya. You good?
All right.
Thank you
Bye.
all.
All right. Enjoy your holidays.